Hi everybody, this is Lara with your weekly video for the S&P 500 for the week ending Friday 17th of February 2023. A little bit of downward movement to end the week sees another downward week, but they're small range weeks, the last two little downward weeks, with small real bodies on the candlesticks and prices hitting support about 4050. Downward movement also comes with declining volume. Now that doesn't mean it can't continue lower, it's just previous upward movement had greater range and greater volume, and now two downward weeks have smaller range and lighter volume. It looks like a pullback within an ongoing upward trend, most likely. That's what it looks like at the moment. There is quite a lot of evidence for the bullish case, and if you missed my presentation, I've posted it on the website, and so for members only, once you're logged in, you'll be able to see that. And I outlined that evidence again, bullish case versus bearish case. I tried to do it quite logically for you. There are a couple of really important points for the bearish case. I'm concerned about that inverted yield curve, and the bond market is very bearish. But there's also a lot of evidence for the bullish case. So on balance of probability, I still judge it's most likely that the bear market is over. So much so, I've invested my own money and bought a few stocks this week. So the main Elliott wave count remains bullish, but bottom line is we need to see a new high above August 2022 at 4325.28 in order to have a reasonable amount of confidence and, well, further confidence in that view. If the new NYSE All Issues AD line makes a new high above August 22, I would also have substantial confidence that the bear market is over. Elliott wave is fractal. We have to fit the weekly chart into the monthly chart. If you have not already done so, if you're new here, please click through at the link at the top of the article and view monthly chart. There's the monthly charts. There is text, charts, and for those of you who like it, video. The monthly chart sees cycle wave 5 beginning at the COVID crash in 2020. Cycle wave 5 unfolding as an impulse. There's a beautiful impulse for primary wave 1, the first wave within it, and now what looks best as a zigzag for primary wave 2 could be over at this low. I do still have a bearish alternate. We do still need to understand there is a little or some evidence for that. If primary 2 is over here, then primary 3 should have begun, and at 7742 it would reach 1.618, the length of primary wave 1. Primary wave 3 may only subdivide as an impulse, and that will be labelled at intermediate degree 1, 2, 3, 4, 5. It must meet all of the core Elliott wave rules for that structure. 1 must subdivide as a 5-wave motive structure, either an impulse or a diagonal, and with minor wave 1 looking best as an impulse, that suggests intermediate wave 1 is most likely to be an impulse. Intermediate 2, when it arrives, may not move beyond the start of 1 below 3491.58, and then intermediate 3 may not be the shortest of 1, 3 and 5, must move beyond the end of 1 and may only subdivide as an impulse, and then 4 has to unfold and remain above wave 1 price territory, and finally 5 should move beyond the end of 3 to avoid a truncation. That's not a rule, that's a guideline. So those are the core Elliott wave rules for this structure of primary wave 3, and I would expect it should take many months, maybe a couple of years even possibly, to unfold. So this target is possibly a couple of years away. Let's take a look at the daily chart. We're going to look from the low here, the end of primary wave 2. We're now looking at the detail, the structure of minor wave 1, the first wave up off the low. It subdivides as an impulse, minute 1, 2, 3, 4, 5. There's alternation between a zigzag of 2, an expanded flat of 4. The third wave subdivides as an impulse. There's no overlap between 1 and 4, and the fifth wave moves beyond the end of the third. The second wave, a really brief sharp zigzag, not particularly deep though, and now minor wave 3 underway, and I'm labelling within it minute wave 1 over at the last high, and minute wave 2 could be over at Friday's low as a double zigzag. There's the first zigzag here, there's a triangle for X, and the second zigzag for Y. If minute 2 continues any lower, look out for it to find support at the lower edge of the base channel. This is how a base channel should work. Draw the base channel around the first and second wave of a movement. Draw it from the start of the first wave to the end of the second. Place a parallel copy, usually on the first. I've pushed it up a little bit here to sit across these highs to better show us where upward movement in future may find resistance. The lower edge of a base channel in a bull market should provide support for lower degree corrections along the way up. And so if minute 2 continues further, look out for this line here to likely provide support, although it does have now a complete structure at lower time frames. My target for minor 3 expects it to reach 1.618, the length of minor 1, at 4750. That is a common Fibonacci ratio between 1 and 3. For the S&P 500, it's a little bit conservative. It does tend to have really extended third waves, but this is within, if I have my degree of labeling right, this is within a first wave, not the third wave of a third wave. Once we get into the middle of intermediate 3, I'll probably be using 2.618 or even 4.236. We'll see how those targets unfold. Next week, this is risk for this wave count. If minute 2 continues further, it may not move beyond the start of 1 below 3764.49. But if this base channel is breached by clear downward movement and then price moves back within the bear market channel, if that happens, probability may well shift to the bearish wave count. On the weekly chart, this is the bearish alternate wave count. What if the bear market's not over back here? Could it continue further? What Elliott wave structure would fit? If we just move the degree of labeling in the zigzag down 1 degree, it could just be the first zigzag of a double zigzag for primary wave 2. The double may be joined now by a complete 3 in the opposite direction labelled X, subdividing as a zigzag, and now Y may continue lower. The target for support remains the same at 3195. Primary 2 would reach the 0.618 Fibonacci ratio of primary wave 1. There is a little support for this. I went over that in the summary, and it's all in the text article laid out in bullet point in a list format for you. So we do have to continue to consider this while the August 2022 high has not been taken out by the S&P 500. Let's take a look at the daily chart. This low here, intermediate X, this point here, the subdivisions are all the same. 5, 3, 5. That's how a zigzag subdivides, and the bull wave count sees a 5 for a first wave, 3 for a second, and a 5 for another first wave. So all the subdivisions are exactly the same. I'm so sorry. All the subdivisions are exactly the same. It's just the degree of labeling which makes this an alternate. We do need to continue to consider a bearish alternate until that August 2022 high has been taken out. This wave count now expects intermediate Y to unfold as a zigzag lower is in a very early stage, which would be bullish. On the weekly chart, we can see this bear market trend line very confidently breached by a couple of weeks ago, a strong upward week, which had really good push from volume. Volume pushing price higher here, and now for the last 2 completed weeks, volume declining as price falls very slightly with small range bodies, slightly longer upper wicks than lower, but lower wicks as well, smaller range and lighter volume. This looks like most likely a pause within an ongoing upward trend and not necessarily the start of a new downward trend. There's no bearish engulfing candlestick pattern here. I guess you could consider these two together a harami, but this real body of this candlestick, I don't really think, it's not an unusually large real body, and this real body of the little red candlestick is small enough to be in a harami, but I don't think this is really that large to be part of a harami. It's slightly bearish, and a harami isn't even a very strong bearish candlestick reversal pattern anyway. So we've been over price, on balance volume, looking out for resistance is holding so far at 4160. If we can break through that, next resistance 4260, above that 4545. On balance volume has a range. It was making lows prior to price. I don't like to give too much weight to divergence with on balance volume. I prefer to use it with its trend lines. It's within this narrow range with not great technical significance, but some. A breakout above resistance or below support would give a signal. There is no signal this week. On the weekly chart, ADX still gives us a strong bullish signal. It is coming up from relatively low levels and it is rising, telling us there's an upward trend in place at this time frame. This is not the strongest signal it can give, but it's fairly strong. It would be stronger if the black ADX line came up from with a little bit more space below the DX lines and from a lower level. It is above 15, it is rising. The positive DX line is above the negative. At this point, it tells us there is an upward trend. RSI money flow neutral, stochastics returning to neutral. If there is indeed a new upward trend, then there's a long way to go before ADX reaches extreme and RSI reaches overbought. Friday's session completes a dragonfly doji, bouncing up off support at 4050. This looks like a pullback to test support before a move up and away. Within this downward movement, overall volume is relatively light. Previous upward movement had volume strongly pushing price higher. That's quite bullish. Price is at support and the dragonfly doji is a bullish candlestick reversal pattern. On balance volume also nearing support. This may also assist to hold a fall in price along with support for price at 4050. ADX is declining on the daily chart, although it does indicate an upward trend on the weekly, and it won't take much for the daily to turn back up and again indicate an upward trend. The positive DX line remains above the negative. ADX is a long way from an extreme position at this stage, and RSI is neutral, as is money flow, as is stochastics, a long way before conditions become extreme. A little bit of a decline in ATR as price moves sideways. And here's your list, your bullet points, and I've checked all of these and I've added a little comment down for the last session. Let's take a look at the weekly chart. I won't go over all of them and read them to you. That would be so boring. I'll leave that for you to read yourselves. Between price and breadth as measured by the AD line this week, price has moved lower, a little bit lower, red candlestick, but the AD line has moved a little bit higher. There's a little bit of bullish divergence here for the very short term. It's pretty slight, but it's there. On the daily chart, both price and the AD line have moved lower on a closing basis. Between the AD line and price on a closing basis, there is no new divergence. There was this cluster of bullish divergence that's been resolved. The AD line has not made a new high above its August 2022 highs, but Lowry's operating companies only AD line has, and that's bullish. If the NYSE All Issues AD line, this one, also makes those highs above August 2022, then my analysis would be, I would probably discard that bearish wave count. That would be such a strong bullish signal. We don't have it yet though. The AD line is a lot closer. It's pretty close to even with those August highs, whereas price is further off. So breadth is rising and it is led by small caps, which is typical during the early phases of a new bull market. Looking at the NASDAQ AD line though, this is really bearish. So this is one of the pieces of evidence for a bearish wave count. We should take it seriously until those August highs are taken out. This is the risk, which I understand myself and am prepared to tolerate myself. The NASDAQ AD line has made substantial new lows below March 2009, whereas S&P 500 is a very long way off. It's done that before though, and didn't necessarily mean the S&P 500 had to fall. This could continue to develop further as the bull market continues on higher for possibly even another 10 years. I mean, it's been going on for over a decade. It's obviously hopeless as a timing tool and may be one of the earliest warning signs. For the very short term, that was the monthly chart. On the weekly chart, NASDAQ AD line has improved slightly this week. The S&P 500 has not. This is very short-term bullish divergence. We're starting to get a little bit of a cluster now of bullish divergence here, although this one here was resolved, and so now we've only got this very short-term bullish divergence here. There is still this mid-term bearish divergence between price and the COVID lows between NASDAQ AD line as well. Having a look at VIX as a measure of volatility, this week prices moved lower, inverted VIX has moved higher. Again, very short-term bullish divergence. We see this with NASDAQ AD line, NYSE All Issues AD line, and inverted VIX. Putting those three together, when they all agree, I tend to have just a little bit more confidence. This is a bullish signal telling us we're most likely to get a little bit of upward movement next week, but it is really short-term, very short-term. There is still cluster of bullish divergence. Inverted VIX has made new highs beyond August 2022, but the S&P 500 is not. So this bullish divergence supports a bullish wave count. Between VIX and VVIX, however, there is short-term bearish divergence, but there is also this longer-term bullish divergence. Volatility of VIX is depressed compared to VIX. With this longer-term divergence on the weekly chart, that's bullish for price and supports a bullish Elliott wave count. For the very short term, for Friday, price moved lower, inverted VIX moved slightly higher, very short term bullish divergence. That's it from me at the end of the week for your S&P analysis. I thank all of you so much, especially members who have been here for over a decade now. I really, really appreciate your support, and I hope you're all looking forward to a fantastic weekend.